Hello and welcome. This is a special edition that we're actually recording today, and basically upon a request from one of our members from ASX Traders United. So a shout out to Chris in terms of this particular request. He basically was asking in terms of a short-term and a long-term analysis in relation to silver and gold. But upon discussion with Yash here, what we thought was we would cover silver and gold. Yes, we would. But what we'd also do is we'd also cover copper as well as iron ore, mainly for the reason that down here in Australia in particular, we actually have a very, very heavy mineral and mining section that covers all of these elements. And I thought in particular, we've got Yash here who loves covering copper versus gold. So what we'll do is we'll firstly start off in terms of leading in with Yash to actually have a discussion in terms of copper versus gold. And once Yash has actually discussed that, then we'll go into having a discussion in terms of the short term, having a look in terms of what the situation is at this point in time, in terms of looking at silver, gold, then copper, and also iron ore. And then we'll have a look at the long term. So let's lead into the discussion of copper versus gold with Yash.
Thanks for that, Steve. Let's get into it. So, a general distinction that we want to set for you guys as to why we believe copper versus gold is an important chart to discuss is because copper is used for manufacturing and generally growth or productivity in terms of a review of an economic health of a country. Copper is used for industrial equipment. It's used for car manufacturing. It's used for your data assets, your electrical grids, and whatever growth and development that's currently happening in AI as well. All of that requires copper. When you have people investing into copper as compared to gold, gold is a little bit more of a safe haven asset. It's less used in manufacturing in comparison to copper. So when people flock to gold, they're more worried about the state of the economy and they want to go towards a safe haven. When they want to go towards copper, they're a little bit more risk on and they're betting on productivity and growth within the markets. So one of the reasons why we discuss the relationship between copper versus gold is to distinguish between those two risk aspects. And recently, we've discussed it a couple of times, but copper versus gold, whenever this chart is particularly going green, it shows strength in the risk on environment generally. And you can see that with the new fresh highs that the S&P 500 and the Russells are making. But not covering those aspects much more, but generally the relationship of copper versus gold. You can see recently copper versus gold bottom within this particular green area and has started to make its way up towards the 200-week MA line. And in the past, that's happened as well. It generally starts from this particular area and then makes its way up. In about 2020, it found support and then it started moving up from the 200-week MA as well. And in the past as well, you can see in 2016 as well, we had some distinguishing events showing the strength in copper versus gold. A lot of this, when these particular instances moved up, you would remember that 2017, we had a great bull market in the SPX as well as crypto assets. Similar in 2020, just after COVID, people started investing in manufacturing growth again. We started having really good bull markets in both equities and crypto. We are flashing similar signals right now. And you can see over here, at least for the last easily 12 to 13 weeks, we have been going upwards consistently. The MACD is showing a lot of strength. The RSI is actually coming into overbought territory, which could mean that we could either go to touch this 200-week MA line and just rest over here for a bit and get a bit of a rejection, or we could break above it and then come for support as well and have a bit of a breathing area before the market decides to continue in this risk direction or take a bit of a breather and correct itself. Right now, the copper versus gold chart is signaling really good strength for equities and risk assets, possibly such as crypto as well. And this is why, at least in the short term, I'm betting a little bit more on productivity and growth as compared to safe haven assets such as gold and silver. But I'll let Steve jump a little bit more on that and share his views.
Wonderful. Thank you so much for that, Yash. That was a perfect introduction in terms of this particular special edition that we're actually doing here today. So now we'll take a look at the short-term situation in relation to all of these elements. We'll firstly start off with gold and then we'll move into the others. So taking a look here at gold, we've got on the left-hand side, we have the Ichimoku curve. On the right-hand side, we have the short-term moving averages, as well as also the VWAPs and the long-term moving averages on the daily chart. So as you can see in terms of the situation here, in terms of mid-June of 2026, the situation is, in terms of gold, we are below all of the moving averages and the VWAPs at this stage. So we've actually got a fair amount of weakness going on in relation to gold. These resistance areas that we have here are from October of last year. And as soon as we've actually sunk beneath those over the last week, we really haven't had any strength in terms of anything coming back towards them as well, in terms of rising back above them. Until maybe this week coming up, anything is potential in terms of trying to come back up and test and then see how it actually goes in relation to the unit price for gold. But in order to get back up to those particular resistance areas, we'd need to actually pass through these short-term moving averages which are coming down. Now, by the short-term moving averages, I mean the yellow line and the cyan line, being the 8-day moving average, EMA that is, the exponential moving average, as well as a 15-day EMA. So they are currently moving downwards and would pose resistance from the underside as well. On top of that, we also have the 200-day moving average as well, being that red line. So as you can see, there's a lot of pressure on gold at this point, pushing the prices downwards at this stage. And in order for gold prices to actually improve and start moving back upwards, you would need to see the unit price push through all of that resistance and be able to get back above here. So at this point, you're really seeing a lot of pressure pushing it down in terms of actually keeping it down below those areas. That's the problem we see in terms of gold at this stage. The same situation in terms of the Ichimoku curve on the left-hand side. The way we actually interpret this is the trend line being the blue line, or the Tenkan-sen. That's downwards, as you can basically see, lower highs and lower lows. The baseline is also the other aspect there. That's also what you consider to be a resistance area. Would need to get above this area here overall, which at the present time is $4,414. So until it really gets above those areas, you're really, really struggling to see any form of positivity at all in terms of gold. On top of that, the lagging indicator is essentially forming lower highs and lower lows as well. So really, in terms of the short-term trend in terms of gold, we're really struggling in terms of seeing any positivity here whatsoever. Now, gold and silver tend to work in tandem in terms of their trending in general. And in terms of the short-term aspects, we're seeing a similar kind of trend forming in relation to silver as well. The difference that we see here as well, which is also noted in terms of our weekly video, which has just been posted yesterday. So in terms of that overall, what the circumstance is with that is we're still seeing lower highs and lower lows being formed in terms of the unit price for silver. But interestingly, when it comes to silver, it's actually still below the short-term moving averages. But when it comes to the 200-day moving average being that red line, we actually closed above that in terms of the silver futures on Friday. So is this actually showing some form of strength? But we'd need to see some confirmation based on that in relation to the technical analysis. That's the big thing about technical analysis. One particular day does not form a trend, and we'd need to actually see some confirmation and some actual further follow through before we can say we actually have some movement that's actually confirming the movement upwards in relation to that. So let's wait and see what does happen. But either way, we'd need to see some movement there above these short-term moving averages before we can really say that things are actually moving upwards. And if we move across to the left-hand side in terms of the Ichimoku curve, you can really see that a large amount of movement would need to actually occur before we can really say we've got some full confirmation there. You can see that the trend, being the Tenkan-sen blue line, is still really forming lower highs and lower lows. On top of that, if you look at that resistance area, in terms of that baseline red line, we're all the way back up there at $75.85. That's a really, really long way away. That's actually forming way back up here where this quarterly VWAP is in relation to that pink line. So as you can see, it's a really, really high distance away. So personally, not feeling very, very comfortable with silver being in very, very high demand, I suppose, in terms of really pushing that up, until we get really, really well up above this 150-day moving average more than anything else, being that orange line. So that's the way silver's looking at this point in time. And if you look at the lagging indicator, you're still on lower highs and lower lows at this point in time as well. Okay, so that's gold and silver taken care of. How about copper? Well, copper, as you can see from what Yash was talking about below previously, was doing pretty well, okay, especially compared to gold. So copper versus gold overall is moving along quite nicely, especially over the last 13 weeks, like he was just mentioning in his presentation. And as you can see, it's reflected quite well even in the short term. It's well above all of the moving averages that we've just been talking about for gold and silver, especially the short-term moving averages here as well, being the yellow and the cyan line. So overall, copper is going along quite strong, but it isn't forming full-on higher highs, higher lows all the way through. It's come back, and it's actually come back and tested this quarterly VWAP being that pink line. So overall, there's still, I suppose, a little bit of weakness overall in terms of bringing it back to that quarterly VWAP, but strength at the same time in terms of bouncing off that quarterly VWAP and then moving back upwards. But overall, not too bad when it comes to actually coming back and being above that Tenkan Sen blue line. We're still actually forming a reasonable amount of strength there. But a little bit of caution though in relation to the baseline actually rising as well too. Should this baseline, being the red line, breach above the blue Tenkan Sen line, then that would actually be a sign of a potential negative signal in relation to the way that things work with the Ichimoku curves. So just something to be aware of. But it wouldn't be a totally negative aspect until we're really closing below the cloud area. So overall, not so bad when it comes to things overall in relation to Ichimoku curve analysis. We will actually have a higher high, higher low situation forming fairly soon because we've actually got the high here, but in terms of the most recent high on the lagging indicator. So we've still got a reasonable amount of strength when it comes to copper overall. Now, iron ore is an interesting one. This is the iron ore futures on the same exchange that we were just talking about in terms of gold, silver, and copper. But it's not very, very clear. You don't really have any ranges or anything along those lines there. So I looked for another iron ore exchange situation on a different exchange overall. And this is one I actually found in terms of IG markets. So it's actually more of a CFD rather than a futures product. But it comes out to be about the same kind of pattern in terms of compared to the futures. But this is a little bit more that you can actually analyze and be able to get more of a range with instead. So we'll use this one instead to be able to get more of an idea. As you can see, it's actually been quite a negative trend in the short term, especially since about mid-May. And it's actually closed well below all of the moving averages, as you can see on this right-hand side. So overall, not a very, very positive chart in terms of situation here with iron ore. So not looking all that great at this point in time. It would need to really, really recover, especially above the short-term moving averages. And as you can see, there's even a wick there from Wednesday where it actually attempted to get back above the 15-day EMA, but it really, really did not actually do that. It actually went well back below both of the EMAs, and it's falling ever since. So iron ore is really, really struggling at this point in time. But essentially that would need to really come back above here. How far up? Well, let's have a look at the Ichimoku curve to see if we can get some clues. Overall here, well, we're getting some higher highs forming here on the Ichimoku curve in terms of the lagging indicator, so there's potential for some strength coming through. But as you can see, it's really struggled to get back above the trend indicator being the Tenkan Sen. Interesting. We're well below the cloud, not a good sign. So we've got a lot of negativity going on. And then we've got the baseline area here, which is acting as resistance, and we're well below that. So $788.70 on the CFDs is the area to look at there. Now, 788 is well below the quarterly VWAP, so you really need to be getting very, very well up above any of these VWAPs here before we can really say we've got some strength back in this market. So overall, you really need to be getting up back above this swing area here, at least to really start saying you've got a trend forming that you'd want to be involved in terms of anything there in relation to iron ore. So we can really see that we've got a lot of weakness in iron ore, got a lot of strength in copper, and in terms of gold and silver, we'd really like to start seeing things swinging around more than anything else, at least in terms of the short-term aspects overall. So taking a look at the longer-term charts now, if we have a look at gold firstly to start off with, you can see in terms of about a year ago, we're having a look at about 3,300 to begin with, so around about a year ago, got up to around about 5,600, and we're down around about a 50% retracement since that high. So overall, a lot of people will probably be thinking, wow, we've actually really come back quite a bit. And the truth is, yes, you have. You've actually come back through the 200-day moving average after having tested that at around about mid-March. Now you're actually around about that same level compared to around about mid-March. And now it's a matter of, well, is this basically going to come back up and test it? But if it does, you're basically coming back to test these areas here in terms of this support and resistance line. And as you can see, they've actually been drawn from these highs around over here. So they're actually very, very important resistance lines that have actually drawn in there. we're talking about very, very significant areas. And even if it does get passed through those areas, you've actually now contending with 200-day moving average. That is actually very, very significant overall. And on top of that as well, you will actually be also dealing with VWAP areas as well, in terms of quarterly VWAP as well as daily VWAPs on top of that. And then also with a 100-day moving average, which is now turning downwards. So overall, from the long-term perspective when it comes to gold, things are actually not looking all that rosy at this point in time. If we also take a look at, say, the DMI index, we're actually picking up steam in terms of a negative indication at this point in time as well. So chances are, if we actually do have another test of this area in terms of this particular potential of the support, this could actually break. So there is always a potential there too. So really, really observe as to whether or not this actually does go back down towards this area here. And if it does, really, really keep an eye on that in terms of whether or not you actually might wish to actually have some form of protection just in case. So that is actually quite an interesting observation. You may actually have a failure of support in relation to all of those. In terms of silver, very, very similar kind of situation as you can see as well. We've got these VWAPs in terms of yearly VWAP, quarterly VWAP, all turning downwards, and on top of that as well, a 100-day moving average turning downwards as well. We're currently testing this 200-day SMA at this point in time, but interestingly with silver, we're actually above that 200-day moving average right now. Will it hold here is the biggest question. If not, whether or not we'll actually hold this particular support area here or not. We actually have a triple bottom at this point in time. One right there from February, another one here from March, and another one here in June. Whether we hold this or not, that's the thing. It's a triple touch, third time's the charm. This will tell us whether or not it holds and whether or not which direction it will actually go, upwards or downwards. So observe that one overall. But this is really, really the telling tale. You see the orange line overall, that gives you the indication of the strength of the trend. If this continues upwards, that will be the strength in terms of the red line being bearish, and that will actually be the strength of the trend itself actually getting stronger in terms of a bearish trend overall. So that's silver. Now, in terms of copper, how are we looking overall there with copper? Well, this has been snaking. So overall, we're not really getting much of a trend here at all in the recent times. And you can see that as well. It's really just been going sideways overall there for the last couple of weeks, essentially. But the biggest thing here with copper is the mere fact that we actually have been having bounces off this quarterly VWAP in recent times. We're above both of the VWAPs, the quarterly VWAP being the purple line, or pink line, and the yearly VWAP being the green line. The interesting thing with this is we've actually had bounces off both of the VWAPs in recent times. That's a sign of strength more than anything else. So the fact that we're actually having bounces off this to the positive side in terms of copper is showing resilience in relation to the stock market overall and the risk-on environment like Yash had actually mentioned earlier in his presentation as well. That bodes well for the share market overall and may actually also be showing more in terms of the mere fact that people are actually moving away from safe havens such as gold and silver. So if you put all of those things together, it may actually be even putting more of a picture towards the mere fact that people may be moving away from gold and silver, which could also be putting more of that picture towards the fact that that triple bottom or the double bottom in the case of gold and silver may actually be potentially failing in the near future as well too. So more to observe in relation to all of that. That's not a clear picture in terms of iron ore there. We'll go across the other iron ore situation here, and we can see kind of similar picture going on here in terms of the weakness going on here with iron ore as well. Another potential double bottom situation going on here. We're below all of these moving averages here, as you can see, below the VWAPs of both the quarterly VWAP and the yearly VWAP, as well as the 100 and the 200-day moving averages. Interestingly, both the 100 and 200-day moving averages are both pointing downwards as well in relation to things here too. We've been below them for quite some time actually, and a number of times. But interestingly enough, with iron ore, it actually does seem to swing up quite a lot very, very quickly. So a very volatile instrument. But of most interest is the fact that we've actually been below in terms of the red factor here for quite some time in terms of the DMI. I'm just looking at that right now. So that's actually very, very intriguing. And the strength of that, especially since about this time here, has actually been increasing quite dramatically. Looking at this here too. So unless we all of a sudden get a marked increase in terms of the blue factor and a decrease in that orange line here to show that the actual strength of the bearishness is actually improving, yeah, I can't really see much improvement happening here for the price of the unit price of iron ore overall. So yeah, it's at this point in time, it's actually looking relatively weak. So I've got a feeling that that actually might come back and test this at this point in time, and we may actually have another test of this double bottom here at this stage as well. But keep an eye on that orange line of the DMI, and if the orange line starts peaking upwards again, that will really, really give us a sign that they actually may come back down and test this area again as well too. So yeah, at this point in time, it is looking very, very likely that iron ore will continue its weakness at this stage. Gold and silver, potentially the same situation, and copper overall looking as though it's going along quite nicely. So I hope that's actually helped. It's been a real pleasure to bring this to you actually in relation to this particular presentation to bring those elements here. So it's been interesting having a look at all of those from the long term, short term perspective, and bringing everything together in terms of this presentation. So if you've liked what you've seen and you'd like more of these kind of presentations, let us know in the comments below. Give us a like, give us a subscribe if you found this useful. But more importantly, just provide us with a comment of what you find interesting and useful out of these kind of presentations as well. And just let us know if other aspects that you might actually find interesting as well too. And we'll see what we can do in terms of bringing some more special presentations your way. But for now, we'll leave it there and we'll catch up with you in the next presentation. Bye for now.